Hello everyone and welcome. My name is Tim, trader at the Camp Compound, a company of professional traders where we show you exactly how, where, when and why we invest. If that sounds interesting, do join our community in the link below. But what are we actually talking about today? Today is our stock day, so we are definitely talking about the S&P 500 and the Nasdaq because those are the two markets that move the rest of the stocks, approximately. We are also going to look at a couple of interesting setups that are forming, as well as a couple that have already formed and are going the way that we expected that they would, and of course some of our current positions. So let's get right to it, shall we? In front of us we have the S&P 500, and what we see here is basically that we're back again at resistance. We've had tab 1, tab 2, tab 3. Now that we are back in our bearish formation, we see that we came to like the halfway point. I hear that my cat is getting ready to make noise, so my apologies beforehand if that bleeds through a little bit. He has this, or this pattern has this middle line, right? And we're bouncing right off. That means that we've had a very short bounce. Little trick, by the way. If you do Alt-I, or press Alt and the I on your keyboard, you invert the market, and that is sometimes a little easier. So what you would see here is that we had a little bounce off of this level right here, the 410, and then only had a very small move before we came back towards this level. That means that the bears in this case were unable to really put any momentum in it, and that we might just go for an immediate second tap, or in this case, fourth tap. That means that there's a bigger chance to break and then move all the way up to 427 in the S&P 500, meaning that markets could definitely still rally up a little bit. What are we looking out for? The 416 area right here. Of course, the previous high is something to keep an eye on. And we had a really big gap right here, which hasn't been filled yet, which could definitely signal a reversal area. So this is kind of the resistance zone that we would be in, because if we hit a clear resistance on a gap fill and then, for instance, also make like a topping tail or something similar, that is a very clear indication of the market kind of maxing out for the moment. So that would either be an interesting point to make a short. I think that would be the most interesting play currently if we look at the market right here. That is what the most interesting play, making a short, because we have this intermediate high, which is very psychologically significant. Now, that is what we're looking for to kind of add to our shorts, for instance, if that happens. If that doesn't happen, and for instance, because we still have an hour left, or tomorrow we may see a gap down, for instance, then we are still looking towards, actually this can go, makes the chart a little messy. Then we would be looking to this area right here for the second or third tap, and we could still see that movement all the way back down to the 356, like we have been talking about in previous videos. Those are still interesting to watch if you want to learn more about trading and about looking into markets and kind of seeing the whole picture of markets together. So if you have some time to spare, go for it. That is the S&P 500. So if we're talking about general stocks, like for instance Walmart and that kind of stuff, like the really big ones, will probably be influenced by the momentum we're seeing here in the S&P 500, because that's kind of what it does. It gauges the momentum of the biggest stocks in the US. Right? Important to know what your ETFs and what your measures do. If we move over to the Nasdaq, or the QQQ in this case, that is a tech stock exchange, basically. So this is the momentum of the technological sector in the US at the moment. That means that we do have an uptrend. We actually beautifully tested this area after breaking through. You see here, first tap, or basically the making of the resistance. Not quite, because you do see that it was already somewhat of a level right here. Like we knew that something was around that 311 from here. Then we had the second tap right here, had a beautiful topping tail, which was invalidated right here. It's important to know as well. The pattern failed, which is a strong case for the upside, which we saw play out right here. And then we did not quite manage to fill the gap properly. just fine, there's no need. And then we retested it here as a support. Retest meaning we came back and we bounced off of it, or we are currently bouncing off of it. We want to see what happens tomorrow, preferably, well, tomorrow the market is closed. Next week, preferably a decently strong green candle as a confirmation. And then basically the chances are quite high that we're moving all the way back up to 333 to this previous high, kind of similar to the S&P 500 as well, with the intermediate high over there. So tech stocks and the general market are currently looking pretty strong, which makes sense because the market is also still a little bit, or the stock market, very important, seems to be somewhat in denial regarding the potential for a broader recession, whereas the credit market, which is something else entirely that we're not going to dive into too deep right now because my god, that would be a 2-hour lecture, and I don't have that time currently, and you probably don't want to have a sudden 2-hour info dump on you. The credit market is getting more ready for the possibility of a recession in the second half of 2023. Keep an eye out for that. Last video we talked a bit more about it, but it was quite technical, so be warned if you want to check that out. So tech stocks doing quite well. I also want to say Apple is a very important indicator currently for how the economy is doing. Apple is currently seen as a safe haven investment. A lot of more high profile investors, as well as retail investors, are currently moving their stock into Apple, or moving their capital into Apple stock, I should say, as a safe haven, as kind of a way to secure purchasing power. Now, if an actual recession hits, that is a little bit weird, because if there is a true full-blown recession, it doesn't really matter if you have a fancy laptop or just a laptop that works in general, if you catch my drift. Luxury brands are not as important, so once Apple starts feeling the crunch, I think that is really when we signify the end of proper bear market, when Apple is really bottoming out, and that is just not yet the case. So keep an eye out for that. Currently, it does look like we are trying to break this overarching trend line. So this is tab 1, tab 2, tab 3, tab 4. Long-time watchers of us will know, or well, long time, we haven't been doing it for that long of a time yet, but will know that if you have 4 taps of a trend line, there's about 60% chance of breaking through. So in the next one, we will move towards 65 to 70%. That is pretty good odds. Now, where can we go? Probably the next important part would be that this gap was just not quite filled, which is interesting. So that is something where a place where we could move towards that 171, but I would be more inclined to say probably around the 174 or the 175, 76. This area right here. That is kind of what I see happening if we break through. Will we see a return then, or a movement back? We will have to see how the market reacts once we're here, and whether or not the credit markets are actually right, if that makes sense. Because currently there are no certainties, there are only probabilities, or like I believe Thomas Sowell would say, there are no solutions in economics, only trade-offs. So keep that in your mind, that at any given time there is never a 100% chance of something happening. Very important to keep that in your mind, because then risk management also makes sense. It should always make sense, but especially to new traders, it doesn't always. And when I was new, I was also guilty of that. Now, let's move on to some other stock that we are currently looking at. Personally, Tesla was really good. If we did actually manage to get that, which is on me, I dropped the ball there, but we would have closed it right here, so that would be a nice 9 to 10%. Personally, I would have liked to get it at 205, but unfortunately that day I was unable to get close to my charts, so c'est la vie. We missed that one. So be it. What I'm currently looking at is Johnson & Johnson. It is looking quite interesting. We have a massive gap right here, which is always interesting because this gap will work like a magnet in the markets. This will attract the price back down, and that is almost a 4% gap. That is very intense. Here we have the first resistance. I want to see if we make a topping tail today. If that is the case, that would be a very, very interesting start of a setup. Not quite good enough because it would be a 70% chance that we were doing well, or that the price will go where we want it to go. And 70% is, in my opinion, not good enough. I want at least 80%, which means that 3 factors must confluence. So for now, we have the trend line and we have potentially a topping tail, but that is not good enough. I also want to see like a divergence or a broader pattern, or I want it to be rejected a couple of times, something like that. Preferably, I would see it go all the way back up to 180. And then from there on out, look if we can find a nice short. But for now, Johnson & Johnson is definitely looking interesting. Same thing for Eli Lilly and Company, or LLY. I still think this is very interesting. We have a good resistance zone right here. You have an insane trend up. 1, 2, 3, 4, 5, 6 days of straight up. And before that, also a very, just a very steep incline upwards, especially the past couple of days. I did not really look into any news about it yet. That might have something to do for it, but you can just tell this is unsustainable. No stock can keep this up for a long time, especially if on Monday we have like one last straight bar up. That would be perfect. You have a time count of 7 days of going straight up, hopefully some volume that droops off. Maybe we can hang around the oversold in the RSI a little bit. That means this bar right here, that is at about 80. And the RSI goes from 0 to 100. 0 meaning bears are absolutely and completely in control. 100 being bulls are absolutely and completely in control. Above 80 means heavily, heavily overbought. Did I say oversold before? I meant overbought. And under 20 means heavily, heavily oversold. If you're in that for a certain amount of time, or if you just hit that in general, you can count that as an extra confluence factor. So we could have, for instance, a bear pattern forming. We have a major resistance. We have a steep incline that must retrace at some point. And then you have either a divergence could form in the RSI, or you have the oversold or the overbought signal. That is kind of what we will be looking at currently, or what I am looking at. JPM is not that interesting at the moment, actually, if we're really looking at it. But AVGO, I also think, is quite ready for a short. The play is still valid, and we would look to enter right here at that 639.40 approximately. I think that would be interesting. That is mainly because there's a decent gap, there's a good resistance, there is a nice set of topping tails, and there was a bearish divergence as well. So that is about 80% chance that we are going further down. Quite nice. And I would be looking to either get between the 7 or 10% approximately. That would be a nice target, depending on how violently it's moving down. But you do see the volume is drooping off, which generally means that the momentum is also trying to slowly dying off. Volume and momentum are very intricately intertwined together, and it's definitely worth to learn a bit more, or to kind of dive into how do volume and momentum go hand in hand. Very important stuff for the aspiring trader. Now, what do we have currently? Crowd is doing absolutely wonderfully. We had an order set for 137, so that would be about, there we go, 7 to 8%. Almost hit that 10%, quite nice. Didn't really fill up this gap here because the gap is from the close to the open, and that would be almost 11 to 12%. As you can tell today, I really like trading gaps. They work beautifully in stock markets, not so much in crypto markets, also because they don't form as much in crypto, but that's perfectly fine. When they do form in crypto, they are incredibly, incredibly powerful. So that's it for crowd. And Nvidia is still hanging around our entry, which is fine. It is taking a while to break down. There's a bit of a gap up here now. but the play is still, well, in play. All of it is still considering for, it's still, well, it's still a good trade. It's just taking a while, which is not a problem. Sometimes it takes a hot minute. Anyway, that is already a longer chat than I was planning on having tonight. Anyway, I hope that this was useful to you, that you've learned something. No matter what happens in the market, keep calm, keep cool, and keep compounding. If you keep steadily knocking those small trades out of the park between 5 to 15%, and every now and then maybe hit a home run with 30, 40, 50%, you will steadily see your portfolio grow, and you will really see over time that it starts compounding if you keep to your proper risk management. Thank you so much, and I will see you all in the next one. Hope you have a great Easter. Bye bye.